The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, today is a special day for two reasons. One is Adrienne Togray is going to be giving her webinar on risk. And believe me, I think it would be great if you could attend it. She knows as much about it as anybody, and that's the only thing we can control in our risk-reward equation. And the second thing, which is really important, is we have Cy Monley as our guest today from Sylvius Financial, and we're going to be talking to him about the grain markets, tariffs, and a whole bunch of things, because he's really involved in this stuff, folks. So maybe he can answer some of the questions, and we've got these crops in Argentina and other things that we would like to go through. Regarding the someone's asked me to make a comment about Gary Cohn resigning. The only thing I remember about Gary Cohn was he's the arch enemy of Martin Armstrong, who I've always respected a great deal. They didn't have a lot in common, I guess, many years ago. So we'll see what happens. Regarding those tariffs, folks, just remember from Hamlet, Act 3, Scene 2, where he says, the man doth protest too much. When people start complaining a lot, you know, they know they must be doing the wrong thing. That's the main thing. You can remember that with your children. Anytime, you know, they start to well, let's forget that. But anyway, I don't think the tariffs will mean a lot. I don't know how long they'll stay, but I can tell you this. In Hong Kong, when Tesla came out with their cars, they made an agreement with the Hong Kong government that they would not be taxed, because any cars coming in to Hong Kong, because they don't make any cars there, are taxed at 100%. So if you had a $150,000 Tesla, it costs $300,000, except for those first few years, where it only cost $150,000. That's why when you go to Hong Kong and look around, you're going to see more Teslas than you do just about any other kind of car, because they were buying them at a 50% discount. Now, how is that fair? You know, so I don't know. We'll have to wait and see how this works out. The markets, you know, they're not paying too much attention to it. You know, the main thing what happened last night is the fact that when this occurred, let's just take a look at the DAX, because when it came out last night, you'll notice here that the market stopped right at the 61% retracement, spot on the DAX. Now, you think that might be, you know, an aberration. Well, that's a possibility, but let's take a quick look here to see what happened to the S&P last night, because you'll see that it stopped exactly at the 61% retracement, and then came down and actually tested it. Basically that's what you're looking at. And now we've got an ABCD structure that could take it up to the 2714 level. At the same time that we were looking at the DAX and the NASDAQ, what was happening? Let's try that again, Larry. The NASDAQ, wow. Let's have a judge's ruling here and take a little break here. When at the same time we were looking at the S&P and the DAX, the NASDAQ was actually looking much more bullish. If you take a look at the NASDAQ, you'll see that it could not even make a 50% retracement. It made a 61% retracement from the previous day's low on the 5th, but it didn't do anything, and that sets up an ABCD structure into that gap up around the 68.88, 68.90 level. Whether that'll happen or not, you know, we'll have to wait and see if that is going, you know, to be occurring. Now, the last one, of course, that we want to look at is the, I believe, the Dow Jones Industrial Average, and we'll take a look at this E-mini Dow Jones. Just give me 1 second here. There we go. And we'll get this up. You'll notice here the Dow Jones left a big gap. We were down almost 500 points last night. We went almost to the exact 78% level. We missed it by just a little bit. We rallied about 250 points off the bottom, so there might be some support coming into this today. But any movement below those lows of last night is not good. And I don't know if it's related to somebody resigning or not. That much I don't know. But when you stop and think of how many people are working in there, who knows what's going to happen. But I don't really even like to listen to the doggone the stuff about the election, because everybody gets on there. They all talk at the same time. Oh my God, that just drives me crazy. Whenever I'm in a panel meeting, I'm probably the quietest one there because everybody wants to talk. Let's talk a little bit about bonds here, folks, because this is a really interesting picture that we had. This is the one that we were looking at in the newsletter this past weekend. I wanted to bring this up to show you. This happens to be a 4-hour chart in the bonds. It gives you well over 2 months of data so you can see it, but we're looking for a pullback to occur in the Treasury bonds, and that's pretty much what's happened. We held the level really nicely, and then we'll just look at it this morning where we are right now, because we are still moving to this level up here. Now, this would be an ideal situation. We have this jobs number coming out. You know how crazy this stuff gets, but if we could get it up about another 2 handles up around that 145 or 146 level, boy, that would be a really great place, for a short sale. But remember, folks, we bottomed here on the 21st, so we're 3 weeks into this rally, and it hasn't really done very much other than the first ABCD that ended at 144.22. So this is getting ready to see lower prices, i.e., higher interest rates. So I don't think there's much choice for the Fed about the interest rates, because you're looking at something that is, really, really important. I think it's just the way that it looks to me. Whether that's going to be right or not, I don't know. We'll just have to wait and see. I'm really interested to hear what Cy has to say about tariffs today, and then also, about the crop that's going on in Argentina. If you remember, one of the things that we talked about this past week was the fact that some of these grain markets were not acting really very bullish in the face of a Argentine crop thing. You notice that the meal got up to 403. It's now trading $1,500 below that at 388. So that market, now it could go back above it by the time we open. I don't know, but at least it stopped right at that 78% level. But that's neither here nor there. We'll wait and see. But the corn, wheat, and also the beans and the oil and the meal are all, they're not acting like a weather market. The weather market's in Argentina, which is a huge crop, and it's summertime there. And so we'll see. It's almost near the end of summer now, because we are just the opposite, of course, being in the northern hemisphere. So those are just some of the things that we're going to be asking Cy about this morning to see what happens. Remember, Cy's first job was working for Rich Anderson, 25 years ago or so, and now Cy he stands alone as far as hedging crops and helping farmers and stuff. It's Sylvia's Financial is a really big business, so we'll have him on. Anyway, we'll take a break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, I'm back, folks. I'm going to say one little thing about politics, and then it's over. I'm from southern Indiana, as most of you know, the old area of Richard P. Daley, the mayor of Chicago, and also a few other people. But in Chicago, when I lived there during the 80s, I used to, I drive very slow, but when I would go with Byron drives quite fast. And when you're in a car and you got a ticket in Chicago, you just gave your license, and with it was a $100 bill. He checked to make sure your date of your license hadn't expired, and then you were free to go. If you just tried to pay the ticket, you're looking at about $250 plus you had to show up in court. So it was easier for people to give them $100. You talk about corruption, that's neither here nor there. I don't know if that still goes on or not in Chicago, but it seems like Chicago's really got their act together now. With all the, well, let's move on to some of these markets. Folks, the one thing we want to really keep a close eye on here is this euro. We're up in this area where we're going to have some really serious resistance. We've been as high as 120. Yeah. Hey, Jim, $100 in 1983, it is now. I mean, that was a lot of money back in those days. But anyway, we got up to as high as 124.23. We're trading around that 124 level. And of course, with the jobs report coming in here on Friday, that's probably going to make everything really move. But there is some resistance up here in this euro. The dollar index, if you remember, one of the things that we talked about in the newsletter this past week, the importance of this dollar index. And if you give me 1 second here, I will get it up here because we are very, very close to this projected target that we were looking at. Oh, shucks. Stop the music here. Hold on. Shut the front door and raise the rent. Let's get this up here. Here's the dollar index. As you can see, we're looking for this pullback to come in around the 89.30 level. We're trading around 89.60, I believe, right about now. So we'll be able to see if that's going that's going to be the case. So anyway, that's what we're looking at here. The rest of the markets around the world have backed off a little bit, but they've come back pretty good. So I think they're overblowing this thing about, hey, I better shut up about the politics, because I know less about that than anything that I know. So let's just move on to the technical parts of the market. Someone asked me a question: what was the one single thing that I learned that I remember the most, that was probably the most helpful to anything I did? Well, the main one, of course, was my association with Mark Douglas, and the fact that you don't need to know what's going to happen next in the market to make money. And the other thing is to stop worrying about those fears. The fear of leaving money on the table, fear of being stopped out, fear of missing a move. Those were the main things. The technical thing, the most one that I was my affiliation with Bryce Gilmore back in the late 80s, because he really showed me how all these numbers of sacred geometry fit together, of which the Fibonacci summation sequence is there, because Bryce's theory, along with Pythagoras, was the secret to these numbers were the square roots of 1, 2, 3, 4, and 5. That basically describes just about every move you could ever see in the markets. Now, I only use certain ratios, as most of you know. I use 61% and 78% for contracting ratios, and 1.27 and 1.618 for expanding ratios. Regarding astrology, folks, I've written some books on astrology, but they're very, very basic. They look at just simple statistics of full moons, new moons, retrograde motions of Mercury and some of the other planets, some of the bigger aspects that occur. I firmly believe in my heart that the answer to the markets is astrological, but I've only seen bits and pieces of it. And that's that's just the bottom line. And I don't search for the Holy Grail anymore. I haven't looked at that for, many, many years. I really don't pay a whole lot of attention to it, because I'm focused on, if the markets are going up, there's more buyers, and if markets are going down, there's more sellers. If this news about Gary Cohen was really bad, why did the stock market rally 300 points off the bottom, which it's done so far? So we'll think if that's the case, and that's the other thing. So anyway, someone said salute to me or drink to me or whatever, but that reminded me when I was on the floor of the exchange back in '83, when I first started to trade on the floor. I noticed that when you went into the members lounge, all these guys had little flasks and God knows what else, but they were all drinking. I mean, there was so much alcohol consumed on the floor of the exchange, not on the floor itself, but in the members lounge. Evidently, the stress of being down there was a great deal. I particularly didn't care for it, so I traded up in the office. But, we have all the facilities now to trade just like a floor trader. Our commissions are down to almost nothing, and our execution is, far better than trading in the pit. That's basically, I don't know what alcohol they were using. I just saw so many of those little flasks all the time. That's pretty much what it was. I wouldn't know the smell of marijuana if it was right in front of me, so I don't know if, I'm sure I know the other drugs were available, of course, but, I never was involved with that. Being in pharmacy, I felt that was kind of stupid. And, trading was actually, I was pretty lucky in the trading part, but, if you're trading under a great deal of pressure, boy, your chances of making money are greatly reduced, boys and girls. If you just paper traded, take the pressure off. Everybody could do this, but when you start keeping score with money, then you're able to look at it. That's pretty much it. So we'll see if that's going to be the case. Byron just Skyped me. He was listening to the show, and he said it's not like that in Chicago anymore. He said the policemen are not taking $100 bills. I guess they need the money to run the city, but they don't do that anymore. I imagine a few still do, but he said that's really not a problem. And the problem with Chicago, folks, is the South Side, down between, around 35th and Shields, where the old Comiskey, the new Comiskey Park is there too, but that's where it starts, and it goes all the way down to 125th Street in Kensington, the really bad area. But the worst area is between 35th and 80th Street on the south side of Chicago. You don't want to be down there at night. That anywhere near Halstead and that area, stay away from it. Chicago is a fabulous city. It's one of my favorite cities in the whole world. And I just my favorite cities in the United States, the big ones are of course San Francisco, New York, Los Angeles, and Chicago. Smaller cities, Tucson, San Luis Obispo. China, no doubt about Shanghai being a wonderful place. Beijing's okay on a clear day that you usually get around December 19th and 20th. And then the smaller cities, Xi'an, Hangzhou, Guangzhou, all those are great. And of course, Hong Kong is a world-class place. If you ever get a chance to go to Hong Kong, folks, that's a really wonderful place to go. The people are extremely nice. The only thing, if you don't buy real estate, you're going to be okay. But if you go there to buy real estate, it's a little bit off the wall. Almost, I think it's one of the most expensive places in the world. So we'll see. Anyway, we got Cy Only coming up, folks. Stay tuned. This is going to be fun for me and for you. I hope you call in. Mr. Z, if you got any questions, Cy would love to hear from you. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Cy Monley of Sylvia's Financial on the line. Cy, are you there?
Hi, Larry. Good morning.
Good morning to you. So I've got some questions from some of our listeners. If we could cover those first. And the number one question that's come up several times is, how much are these tariffs going to affect your business as far as, the grains and stuff? Do you have a statement on that or a feeling?
Sure. So when you look at buyers of commodities globally, they have their buying needs set in. So I think it's really hard to change long-term needs. It might change short-term headlines. For example, with the NAFTA, Mexico stopped buying U.S. corn for a little bit and said, hey, we're going to buy Brazilian corn. But it's really hard to do that, right? Mm-hmm. There's a lot of other factors to go in besides saying, hey, we're not going to buy your grain anymore. So short-term, it causes a little effect with prices. But long-term, I think it's really hard. You would have to do a lot of damage. Like, these tariffs would have to be in place for a year. The buyer's going to buy the cheapest grain in the world with the most effective shipping methods, period. Right? And so if the tariffs come on, you're going to have to look at that logistics.
Okay, I have another question from one of our listeners. The farmers that you work with, do they also speculate in the markets as far as thinking, grains are going to go higher or lower, or they just strictly do hedges?
Well, most of our book is hedging. If we do have speculative accounts, we open a spec account. But the best thing to do is keep the farm and the business separate from that. And remember, they are already speculative long an asset. They're a commodity, so they're already making a bet, right? So the hedging part is how to lay off that much length. Yeah. Most farmers don't speculate separately. Like, I think we have very few speculative accounts. Let's put it that way.
Wow, that's amazing. In the cattle business, it's altogether different because they love to be long the futures and long the cash. The other question
that's changing. Yeah.
It is. Oh, really? Oh,
yeah.
Wow.
We built software process for that too, Larry. I mean, the ability to be the ability to be very disciplined is changing, is coming into the markets more, I think.
Is that mainly because the size of these operations is just so huge that it's just a money-making business from the beginning if you structure it right? Is that the reason?
That's correct. And as you and I know, that volatility can eat at you, right? And so when you're always on the backside of that wrong move, that hurts. And so, gosh, let's take some out. To your point, let's take some out of this business. And speculate on 10 or 20%, right? So, hey, if we want to be bullish cattle, that's fine, but you don't be bullish the whole pen, right? You got to be disciplined.
Okay, what's been the effect of China in some of these markets? Because they come in and they buy huge quantities of wheat and soybeans, and are they still the huge factor that they've always been? And I understand from years ago they were great traders and they knew how to play the markets. In other words, when they were selling, they would put out really good news, and when they were buying, they'd put out bad news. So is that still going on?
Oh, big time. And they are the world buyer on a few levels, from cattle and hogs and soybeans, right? If they weren't buying the U.S. soybeans like they are, the global beans, beans would be at $7, not $10. Yeah. It's amazing. Sure. Same thing, corn at $4. And I'll go back to the tariffs on the commodities real quick. It will affect soybeans more than it will corn. We crush or use 85 to 90% of our corn. We only use 50% of our soybeans, and we export the rest. So you got to remember, you got to think about what commodity you're talking about, right? Because we use ethanol here, is 33% of your corn usage. So if you think of corn and soybeans, they're different needs. Export's the big deal. So if he's going to slap on a tariff, it's not going to really affect corn because we use it all.
Sure. Wow, that's really good. Hey, we got a caller from Philadelphia. John, are you there? Uh-oh, what is that noise? John, are you there? Well, evidently we have. Si, are you still there?
I am, yeah.
Evidently, John was not able to get on, but he has a question about soy. When it gets back on, we'll be able to be able to answer him. Now, the next question that we have is about the drought that's going on in Argentina. What's the status of that right now? I know you saw this drought coming about 6 or 7 weeks ago, and was able to get into some of this. But where do we stand with that drought right now, Si?
It's two things. I think it's played out. Here's why. You've got a drought in Argentina, but the other crop over there, the Brazilian crop's getting bigger. So as the Argentina crop is coming down, the Brazilian crop has gotten bigger. Yes, it's a problem, and we're going to have to figure it out, but it's like August 25th over there. And so August for here, saying, gosh, if they catch a late rain, it's going to grow a crop. So my thinking is short term, a lot of the fear is in.
Yeah.
And I look at
we have John
prices.
back. We got John back on the line now. John, are you there?
I am. Good morning, Larry and Si.
Well, go ahead.
morning,
Ask
John.
Si your question, my friend.
Si, thanks so much for going into the late rain potential for the Argentina soy crop. Si, I wanted to ask you a very specific question regarding what you and your farmer clients are doing in the U.S., particularly with the new crop bean contract. Now with the November contract being up 1040, lots of guys can, earn a decent profit, and I suspect are forward selling some of their anticipated summer crop. My question, Si, since your clients are always, they're saying, okay, fine, if I can sell my crop at 1040, that'd be great, but if it goes to 1213, I don't want to give up that much. What tactics, what instruments are you helping them with to guard against future upside if they're hedging right now?
Well, yeah, that's a good question. So let's look at the difference. 1040 November beans at $4 D's corn. Okay, so if you look at we have a software program that we run all farmers through, and if you look at it on a national scale, it really makes sense to plant soybeans today. The February averages are set. That's the spring price. It's the average of February for insurance. So now farmers are sitting there saying, gosh, I got 1030 beans and I got about $4 corn. My break-evens mostly are around $4, and break-evens are mostly around $9 for beans. So the question is what products do we use? First, you look at your insurance. That's their biggest decision, and insurance is set at a high level. You're guaranteeing, if you've got a 10% deductible, gosh, you're guaranteeing at least I'm going to get break even. Meaning you take $10, 1030 minus 10%. Okay, so you're saying, all right, about 930, my insurance kicks in, so I think I'll plant soybeans if you can. Okay, if you can move those acres around. That's the first product you look at. Is, gosh, does the insurance make sense more for corn or soybeans? And it makes more sense for beans. Then we go and look at futures and options, cash sales, managed bushels program, structured products, all those. And so our software will boil that down and say, hey, this is your next best product.
Hey, Si, can you stay with us? And John, can you stay with us? We'll be right back. 877-927-6648. We have another question for you, Si. Hold on.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Cy Monley of Sylvia's Financial, and Mr. Z in the room has asked him a question. John, you want to continue on with your questions?
Thanks so much for that discussion. That's just fascinating stuff. I confess, I would love to sit in your office and watch you deal with your clients from time to time. That's so fascinating. So, one follow-up question: do you do the meat futures, the hogs and cattle with your clients, or no?
Uh-oh, have we lost Cy? I guess we have, John. I happen to know the answer to that. Yes, they do that too. It's much smaller than their grain and oilseed business, but they certainly do have pretty large cattle operations and hog operations. I know that, but unfortunately we've lost him, so I don't know what happened. Anyway, thanks for calling in, John. We really appreciate it. Any other questions you need to ask me? Not
Thank
that I know
you so much
very
for
much.
having Cy on. Much appreciated.
Yeah, he's a real class act, and they built this software and they built a huge business around it. And as you know, his first job was working with Rich Anderson. Back Rich was his first employer. Of course, they're still great friends to this day. I wanted to ask him some more. Evidently, he got really busy. That's the only thing I can think of, which we certainly appreciated. But the main thing I wanted to ask him was, of course, the situation in Argentina, and then also about these tariffs, because the one thing I've always remembered about food, it's indigestible, so it doesn't make any difference if corn goes to $6 or $10. People are going to still use it. So we'll just have to wait and see. But anyway, John, I want to
please thank Cy on my behalf. Will you, Larry?
I certainly will. And one other thing, John, I want to thank you again for bringing that trade for natural gas to our attention. If you'll remember, it's just a few weeks ago that we had it come up, and it's had a heck of a move. We're trading above 277 level. That's 20 cents higher than you pointed it out. And I see your cocoa is still going nuts. It's up well over $5,000 since the buy that you had in January. So keep those great trades coming. It's always nice to have. See, the good trades are much better than the bad trades.
Yeah, I'll keep those bad trades private. Thanks so much, Larry. Bye now.
Thanks for calling in, my friend. I really appreciate it. Okay, here, let's just see if we got Cy back on the line here.
Yep, I'm here, Larry.
Good. We had another question. John was just asking before he just hung up. Who built the software for you, Cy? Who had the idea behind it, and who built it?
Our parent company started it about 15 years ago for selling insurance, and then a partner of mine, Satish Nandaperkar, and I built it. He did most of the labor, but with the guts of it, we built it 10 years ago for adding on to risk management. We have a software for farmers and for cattle.
Okay, now, do you get new business? It's probably a lot by referral would be my guess, right? Because you're so widespread all over the country.
Yeah, we've got 90 crop agents running around, so we're the largest crop insurance agency in the U.S. That's the parent company, and then my two companies work for hedging farmers and elevators and cattlemen. But we're software and service, and the whole idea, Larry, is to the point of discipline, right?
Yeah.
These markets are flying around. So when you and I are talking about, like, we're looking at soybeans, right? We're putting a lot of hedges now into July beans up at 1080. Because why? Because that spread's really wide. We talked about technicals. You look at fundamentals. I think there's a nice spot here to be protected, both fundamentally and technically. And then our software says that, right? 1080 July beans is making a guy a lot of money. So that's a nice way to put on hedges.
Si, when you throw these numbers around, it still startles me because I can remember going back in the days with Rich, 40 years ago and even 20 years ago, we would see beans at $4 and $5 as a high level. And, now this just doesn't happen anymore, which is, really quite amazing. So
it is.
Okay, another question from someone in the room here is asking about this. They're talking again about this drought in Argentina. Will it have an effect of a really big collapse in prices if they get rain here, or has most of the damage been done?
Well, I think you do get a break, but I think it's coming in July. Okay, so November beans underneath $10. So November 18 beans. So call it a 40 or 50 cent break. You're probably going to see some buying again. But July, closer to $10, so a 70-cent break or 80-cent break in July beans is what I could see coming.
Mm-hmm. Question here about drones. This is a tricky one. Do you use a firm that uses drones as far as looking at what the crops are doing?
We don't. No, we don't.
But it is available, isn't it? I mean, don't they have some people that
Oh, yes. Yep. We just don't. That's not our specialty.
Okay. Do you have a number one place where you go to look at the weather, or how is it that you follow the weather markets?
We have numerous weather people we read, Larry, but, I would rather just the way I look at weather, it's really hard to predict 2 weeks out. So save your money. And save your time and know your technicals and just trade within 2 weeks, because anything after that, changes happen all the time.
Wow, that's really cool. Listen, we want to thank you for being on the show today, and we're certainly going to have you on again as we come into these growing. Now, when do they start planting corn? It's toward the end of the March, early April, correct?
Yes, sir. Yep, it all depends on weather. We're getting a nice rain here. I would say the subsoil is pretty good. Everywhere now we're supposed to get another. It was dry. The U.S. was having a drought, but there's supposed to be a nice storm, Larry. So, gosh, you get that storm, you get some subsoil, and guys will be looking to plant here pretty soon.
And then beans start around May, I guess, for the planting.
Yeah. Yep.
Okay.
Yep. And so the big number to look is the March 31st planting report. That's a big report, and I would say you're going to get more bean acres, just as we talked, and less corn acres. So anything on corn on a break, I think, is an interesting buy.
Okay. Well, how about maybe we'll have you on right after the planting intentions at the end of the month. How about that?
You let me know, Larry. I'm here to help.
Hey, you bet, my friend. Listen, the check's in the mail, buddy.
All right. If it doesn't come,
thanks
we'll
a
just
lot,
look for dinner.
Cy. Yeah, we really enjoy having you on. Cy Monley of Sylvia's Financial, folks. Thanks again, Cy.
Sure, Larry. Thank you.
You bet. Okay, folks, we're winding up here for the end of the first area here. Let's just check the markets. So what we're looking at right now, the S&P went right up to that Fibonacci level at 2716. The high was 2716.75. That held so far. Keep a close eye on this euro, folks. We're at 124.14. That's a really key level. Gold's backing off now. We got as high as 1339. We should hold the 1326 level. 1327 should be a very strong support in the gold, because that's at the 61% retracement of yesterday's low that came in at the 1319 level, and then we still have a profit objective of 1344 in the gold market if this ABCD structure that we've been following is going to hold true. And right now it certainly does look like it really is, but we'll have to just wait and see how this is going. So the market's getting back, almost got back to break even, but we started to sell off a little bit. So it'll be interesting to see how this thing unfolds as we go through looking at the rest of it. So we'll take a little break here. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of the natural gas that was making that potential double bottom down there about a week or so ago at 255. We're now trading at 279. We're almost ready to take out the 280 level. You know, there's a market that you were risking 3 cents, and it's made 20 cents. We want to thank Mr. Z for that one because he brought that to our attention. So this is all about risk control, folks. This has nothing to do with anything other than risk control. And Adrian Togaray is giving a seminar tonight at 4:30 New York time. It's free. I've sent the link into the room here to take a look at it, and it's worth the price of admission, and it's free. And it's worth a lot more than that. It's trading on target. Adrian Togaray, she really does know the stuff, so we'll hopefully listen in and see what she has to say, because risk is the most important thing. It's the only thing you can control in trading, folks. You know, your emotions are hard enough to control, but the risk is the one thing that you can control, and it is by far, you know, the most important things. The key things to watch today, I believe, is the euro. This 124.50 area is a tremendous amount of resistance up in this area. The dollar index is pulling right down to the potential this 89.30 level. That's going to be game on if it gets to that point, because going below 89 would set up the euro going a lot higher, and then you're looking at some real serious things. This might be an indication of what's happening, you know, with these tariffs. But right now, the currencies, they don't really care. They're just doing their normal up and down stuff. There's not any gaps or wide ranges in these currencies. They're just doing their own thing. So the real money, and money talks, that's where the action is. So a lot of news about it, but the money's not moving yet. So it might in the future, you know, but we'll have to wait and see if that's going to be the case. We will have Norm Winsky as our guest on Friday, excuse me. He'll be our special guest. He's got something special to talk to us about Jupiter going retrograde motion, and then also the 22nd of the month we have Mercury going retrograde. So 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.